and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us an update for the brokers. We also have Mike Baudendistel back with us with the rail and intermodal update. But first, we're going to go to Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. I'm Strickland. So we've been monitoring this booming freight movement across the country. A lot of volumes, shipping a lot across, all over the place. Tender rejection rates have hit a milestone or a breaking point. They have finally crossed over year in terms of, so they're basically saying tender rejection rates are higher than they were this time last year. This has not happened forever. It hasn't happened in a long time. The index was created in March of 2018, and we have not seen that crossover yet. So this is a pretty big moment in the freight market. Tender rejection rates, of course, going higher indicates increased spot market activity, increased spot market rates, higher margins, etc. It is still, however, well below seasonal peaks. So even though this movement is pretty tremendous and it is significant for this time of year, it is still well below the 14.31% we saw around Christmas this year. This is simply because Christmas and other holiday periods see a contraction of the supply side as well as a little bit of an increase on demand. So right now we're seeing a straight up demand increase, which is compressing the market itself. So the supply side is still hanging in there a little bit more so. So 7.7% today, that is about a 7.6% increase day over day. We are still on a pretty high upward trajectory. Again, a lot of volumes increasing all over the country right now, creating a lot of this volatility. So breaking it down across the United States, tender rejection rates for van are leading the way at 8.2%. Reefer still hanging in there around 10.39%. It is not seeing the big upward turn that we saw with the van rejection rates just yet, but we are starting to see those reefer rejections start to pick up just a little bit. In some of the most volatile markets, up here, this is our volatility table. I sorted it by the outbound tender rejection volatility. So this is going to be the things that show us the strongest increases in relation to the normal. Augusta, Maine, showing one of the strongest increases in the country. Not a huge market, but outside of the normal parameters of tender rejection increases. A 27.73% increase in tender rejection rate, going all the way up to 34.68% on the outbound tender rejection index. Bristol, New Hampshire, again, a lot of New England volatility up there. These are not big markets, but there is something going on outside of the normal. So if you are a carrier that operates up there, you definitely need to make sure that anybody that calls in for spot market moves, anything like that, you increase your margins. Make sure that your prices are covered. You may not have as much trouble finding freight up in this area either. So basically increase your inbound acceptance rates as well, because you might be able to get out of the Northeast for once, so you don't get stuck up there. This market right here, Cape Girardeau, has been one of the strongest increases in terms of tender rejection activity. Week over week, I should say, very consistently high tender rejection rate. We're sitting around 27.31%, sitting right here in the middle of the country. Missouri, just north of Tennessee, on the side of Kentucky, Paducah, et cetera, is included in that market. So anybody that operates in there definitely needs to make sure to check that out. You can see it right here, this blue market right here, Cape Girardeau, sticking out. We've got Harrisburg, Allentown, Pennsylvania, Ontario, Los Angeles being the strongest weighted rejection index movers of the week. These white markets still do have a lot of, and you see Augusta, Maine, that we just talked about up here in the blue as well. So these markets definitely need some attention out of the carriers today. If you want to, and if you have an opportunity to go into any of these blue markets today, you may want to check the spot market, because you might have increased opportunities today on the spot market. Call your customers as well. So Cape Girardeau, Missouri. So looking at this on the outbound volumes and the outbound rejection rates, we are spiking all the way up. The outbound tender volume, van outbound tender volume index has jumped higher than it's been. So a lot of activity in this market. Tender rejection rates are following suit, sitting around 27.31%, as I mentioned. However, let's break down the volumes in terms of overall the length of haul. You see some of these are not actually going up. So length of haul in the, let's see, the mid-haul and the long haul, the monthly change, yearly change, all super high, 153% up year over year. So Cape Girardeau, very much an emerging market this time of year, especially during this recent outbreak. So that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everyone. I am Luke Falasca bringing you another broker update. And we've got some really good stuff happening in the market right now. Let's go ahead and check out what this big mess behind me is. So right now we've got the outbound tender volume index in the United States. So at first, this blue line, that's 2020. So that's as of right now. The green line is 2019. And the orange line is 2018. So we're comparing the seasonal change or difference, yearly changes over the last couple of years to where we are right now. So you can see this blue line just spiked as of the last week and a half here to hit this high point over almost over 11,000 on the index scale, which is really high. So anything over 10,000 means that the freight market is growing. Anything below 10,000 means that it's contracting. So that's the highest level it's hit. You can see some of these big peaks over here. They kind of look like they're higher, but when you look at the actual numbers, they're not. This is the highest point it's ever been. As far as why that is, a number of reasons it could be. Folks trying to move freight due to fears of the virus. We're not really sure, especially as imports are down. But the point is, it's really high. There's a lot of freight out there, so we're going to look at some opportunities. So this first map right here, this is your call map for today. So we're looking at the outbound tender rejection weekly change. So there's a lot of opportunities here for you to capitalize on. If you're going to focus on some areas to call, the blue markets are going to be the markets that are seeing an increase in tender rejections. Pacific Northwest area, especially in Spokane, Washington, seeing some pretty good growth. Other areas of Oregon as well. Here, kind of in the middle of the country, around the Salt Lake City and Colorado region. Typically, Denver doesn't see much growth in tender rejections. It's almost always a backhaul lane. Nobody wants to get out. It's cheap freight coming out. But right now, it is growing. So that western half of the state. A little bit here in the center of the country. North of Arkansas and Tennessee, and then a little bit here in the Wisconsin North region, and then obviously Maine is just through the roof right now, seeing weekly tender rejections increase over 30%. So if you're focusing some sales calls, say focus in those areas, shippers are going to have a little bit harder time covering their freight, and you may even have some opportunities to increase your rates in those areas as well. So one market that struck out to me is the Allentown, Pennsylvania. It's now the third largest market in the United States by market share. Typically, it's not that high. It's usually around like number 10, 9, maybe 8, but now it's number 3. It's bigger than Harrisburg, bigger than LA, bigger than all those markets. Second only to Atlanta and Ontario. So Allentown, Pennsylvania, this blue line here is the outbound tender rejection. You see a massive spike since March 2nd. We went from under 5% all the way up to 15%. So that's 3x there on the tender rejection. So increase your spot market rates quite heavily out of Allentown. If you don't have customers in Allentown, start calling. Shippers are having a harder time covering freight, and they're having to pay more. So this is a great opportunity to be the hero and get that freight covered. On the volume side of things, this green line, also a big increase since the 2nd of March. We're sitting about 345 on the index scale, very high. Typically, we're right around 200. So very high. They're about a 75% increase in outbound volumes over this period of time. So keep an eye there as that continues to push up. That's a great opportunity to land new business and be the hero and make a little extra money as this market continues to rise, as other surrounding markets do as well. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your rail and intermodal update. I'm here with Mike Baudendistel. Mike, what do you have for us today?
Well, a couple of key questions right now in intermodal with all that's going on in the transportation industry. First of all, the truck volumes are surging. There's a question of how much is that translating into improved improved intermodal market, and then also the falling energy prices. I mean, you think about that as being a negative for intermodal because intermodal has that big advantage on fuel surcharge of intermodal being about half of truckload. So as both Luke and Zach talked about, I mean, we're seeing the outbound tender rejection index rising for truckload and long-haul drive van freight rates rising. So the truck market is improving. As far as how that's translating into the intermodal market, I think the results there are still a little bit, remain to be seen. I mean, this is strictly the domestic rail containers that are loaded in United States, and you see sort of in 2020 that's sort of flatlining out. It does look a lot better than international intermodal, which is being more impacted by the coronavirus and fewer imports. But you look at a year-over-year basis, and that last week we're down about 7%. The last week was a little bit worse than the year-to-date trend, which is still down about 5%. For domestic intermodal. So still some weakness, I would say, there, and most of the companies that own containers are not growing those container counts this year. So most of them are keeping them sort of as they are. So sort of their behavior suggests not going to see a lot of volume growth. Some of them have provided guidance to Wall Street saying, okay, well, we should expect to see some, but it doesn't really jive with a lot of the behavior of going out and buying equipment.
Okay, so really more of a subdued view for the intermodal side of things for you.
That's my perception. I mean, I think we're finally past the point where the rails are getting out of lanes that were not profitable to them, sort of those demarketing of lanes. But at the same time, like IANA, Intermodal Association of North America, is saying that they know of very few instances where a domestic intermodal company is actually adding containers to its fleet count. And they only cite kind of one example. They said all the container additions were strictly for replacement containers, don't last all that long.
Gotcha. Excellent. And so what do we have up here?
So up here we have intermodal rates. We have a series in Sonar for intermodal spot rates, which is, it's a minority of the intermodal moves are go on spot rates. Most go on contract rates, but it's still sort of instructive to see sort of how those are moving. And in blue we have intermodal spot rates. You see those spike last year during the traditional peak season. Some of the companies have talked about that as being a muted peak. Others have said, well, it was a strong peak. It was just compressed. But there's actually, this is kind of zoomed in. If you go back further, it's it was a much larger peak the prior year. And so what we have right at the moment is you've seen some improvement in intermodal spot rates up to $1.52 a mile. Still, it's still less than it was right at the beginning of the year, and we're comparing this is the LA to Dallas lane specifically. We're comparing this to truck rates, not complete apples to apples because the truck rates do not include fuel surcharges, but at the same time, when you see those below, even without including the fuel surcharges, this is a very competitive market in even some of those traditional lanes that are longer haul.
Gotcha. So it sounds like a lot of lower activity potentially on the intermodal side of things.
Yeah.
Mike, thank you so much for that insight, and thank you so much for tuning in. That's going to do for this rail and intermodal update, and that's also going to bring us to the end of this episode of FreightWaves Now. We're always streaming around the clock, so check us out on all your favorite streaming platforms, including Apple TV. Check out our FreightWaves TV app. Also, check out our Passport program, where you get access to all of our latest reports on all the industry's latest trends and our deep dives. Thank you so much for tuning in, and we'll see you on the next episode.